What's going on, guys? It is your boy Samu2P, and I'll welcome you back onto my YouTube channel. Today we're going to be looking at some of the markets that you need to be able to look at for 2024 in order to be able to get to make your first six figures. So in today's topic, we are going to be looking at some of the most important markets that you can look at in order to be able to be profitable in the year 2024. So what I have here is the markets, and what we are going to be doing is that I'm going to start off first with the dollar index. I'm going to break down some of the currency markets that I actually do find value in, and as well I'm going to break down some of the index markets, and I want to give you guys some gold nuggets that you guys can go home, take home, and be able to execute as soon as you get home. But most importantly, guys, the most important thing that I want you to be able to do from this video is to be able to take as much information as possible, just so when you do happen to apply it, you are able to see those results. Okay, so now I'm starting off first here with the dollar index. So one thing that I want us to do is we're going to go off to the daily weekly time frame actually, and we are going to be looking at what actually is going on the weekly. And we can see price came here from being a huge upward trend. Price pushed upwards here, and then now we were involved in this movement where it looks like now we are in a correcting form. We're in a correcting, but if you look at it, this eventually happened to have broke the previous lower high, which is here. This broke the previous lower high, on which this is our low, and price didn't break the low, which means that we could see a new change of trend, which now price can start giving us higher high, higher lows, higher high, higher low, higher high, and so on. That is one of the moves that you can expect from the dollar index just by looking at the weekly time frame. So obviously now let us go over to the daily time frame. So what I want to do is that I'm going to look at the weekly and daily so that you are able to understand the bigger concept. Right on the daily time frame, remember we did speak of price being able to break these previous lower highs, which is here. Price broke them. So as soon as it broke them, now you can simply see that it did go down, but it failed to have came all the way to these lows right here. It failed to have came all the way to these lows. So price never came here. So one thing that we can see here is that obviously price is creating new highs, but it's failing to break the lows, which is it's not creating new lows, which eventually means that price could be giving us some sort of low higher highs, higher lows, and now this could be a start of a high that might be able to just break above here. Let me use this, that might be able to just break above this area that I have here. This is a new high that we see, and already with this, for me it makes perfect sense, because already even within the structure here, just take a look at it, we also have this area right here be our high, because this is our low. Higher, let me just do this, our lows, lower high, and then going back to low, and price eventually broke above and came back, and now it's going back up. So that's one of the ways to look at it if you want to see it. So we've got that done with the dollar index. I believe that once you understand that, it will help you be able to just implement what it is that I'm going to show you now. Okay, so now I want us to speak about some of the currencies that you can look at. So obviously, guys, when it comes to currencies, there's what we call exotics, there's the majors, there's different types of currencies that you can take a part of. So with me now, I'm looking at the majors. There's obviously EURUSD, GBPUSD, there's all AUD there's all USD JPY. There's different types of pairs and currencies that both has the USD as either the base currency or as the code currency, but as well there's also different types of currencies that are now involved of what I just mentioned, which is the exotics, which is like your USD MXN, your USD Mexican pesos, and all the other different types of exotic currencies. So that is one of the ways to be able to see it. So with most people, what they do is that they just start off first by going to maybe one currency that they saw become profitable maybe in the last few years, on which the best way that you can go to it is you need to filter out at least 3 exotics, filter out at least 3 majors, and once you filter them out, the best thing that you can do is you can focus on backtesting that specific currencies for at least 100 trades, because what that will do is that it will give you the results of you to be able to see which is more profitable for you, and then what it will allow you to do is you're going to filter out the least profitable, and you're going to be focusing on only the most profitable. So that is one of the first ways that you can see it in terms of the currency side. And now moving over to the index side, there's different types of indices. There's the S&P 500, there's the Nasdaq, there's the Dow Jones, there's literally like your German 30s, there's like whatever you can name it, different types of stocks, companies, and all those things that end up becoming indices, different types of indices as well. So the best thing that I can say now is that I've seen Nasdaq going to become one of the popular indices that most people trade, obviously because it's 100 non-financial companies that are stacked up into one, such as your Facebooks, your Apple. Those are non-financial companies. And as well, now we've got the Dow Jones, which is your US 30s, and other S&P 500, which is also a combine of all the top performing companies. There are like 500 of them, top performing companies. So when you start looking at these things now, for you, I feel like getting to the index level, it comes back also as the type of person that you are and the information that you happen to absorb. Because if you're a person that always follows through on news that are having to do with Apple, Facebook, Google, all these companies that are involved of the Nasdaq, then I would highly suggest that you can look into, I'm trading the Nasdaq markets for the year 2024. But if you're a person that is more, broad, more open, you don't mind just playing around, having low risk, maybe something similar to that, you can look at the S&P 500, because what it does is that it has all the top companies in one. And as well, if you are one person that would like to maybe just look at, like a very specific details, let's say now US 30 has only 30 companies, on which if you are only looking, I believe, over a few top five companies that are on US 30 are the ones that are actually producing over 80% of the US 30 drive on its own. So you need to now look into it, see what it is that you're going to be comfortable with. So what it'll do is that it'll allow you to be able to take a pair that you're bothly confident in terms of the fundamentals, the news, and as well be able to be confident in terms of just technically trading that pair. So that's gonna be like a thing that's not gonna allow you, it's not gonna move you out of your path, but at the same time it's gonna get you closer to getting where you want to be. So now let us look at what are my top pairs. So I'm not going to be breaking down every single pair. Maybe on the next videos that are going to be coming is where I am going to be breaking down the pairs. But now for me, what I have happened to chosen is GBPUSD and also EURUSD. These two have happened to have found so much profitability trading just them, because at the end GBPUSD is, in fact, EURUSD is the most traded currency in the world. If you look at either maybe profit statistics or whatever, you'll notice that the very first currency that is traded is EURUSD. And at the same time, you need to also look at the volatility, because what that does, or what that means for me, it means that that's the most volatile currency. I understand that others can come during volatile moments, volatile, this and that and all of that, but the fact that EURUSD is the most traded means that it's very volatile, and at the same time it means that you can get very cheap spreads. That's why you'd see that EURUSD in fact has zero spreads on most brokers and stuff. So that is one of the best ways that I've decided to go with EURUSD. And as well GBPUSD. With GBPUSD, I found out that normally when I see a certain move on EURUSD, whether it's going up or down, GBPUSD would be one of those pairs that actually allows me to be able to find solid entries that are more gonna respect the setup that I'm seeing compared to EURUSD. EURUSD, it will give me those nice entries, it will give me those sniper entries that are gonna go hit, take profit as quick as possible, but it's also a bit more risky when it comes to I'm going to firstly draw down, maybe taking me out once or twice and then going into profit. So that is what I've noticed trading EURUSD. And for me to be able to say this is because of what? Is because of years of data, years of back testing, years of results, years of me being able to see literally with my own money losing, or it's either losing or making money, winning on some trades, but I had to experience it. That is the thing that I'm coming to you with. I'm coming with experience from me being in the field. So I've happened to have seen GBPUSD and also EURUSD. So before I also had GBP I loved the value on GBP I also had I believe it was like USD JPY or something more similar to that. For me, those were, and as well AUD those are easy to follow through with, especially when it comes to trend following, and as well being able to be slow. I'm looking at the markets in that specific way. But as I started going more deeper into trading, I eventually started seeing that, oh, I'm more profitable trading only these specific ones. Then I started stepping a bit more back and going a bit more deeper onto these specific ones. And when it comes to indices, so normally what I would suggest is that you need to be only focusing on three things that you can trade, three instruments. But what I've done is that normally indices, I've happened to have looked at two indices, which is Nasdaq and also US 30. So I've got your Nasdaq and as well US 30. These are the two indices that I personally say that I'm gonna be giving my full attention to. That is because I remember when I started trading US 30. US 30 for me is just, it's I'm holding on, because even at times when it's not really finding giving me profitable situations or trades, I'll just have it on my radar, because it's one of those trades, not even a trade, one of those instruments that gave me a breakthrough. I remember when I first started trading, I was trading currencies, GBPUSD, EURUSDs, and all those things. And as soon as I started trading US 30, like literally my life changed within the first 6 months of trading it. And that was because I got exposed to a lot of things that I just didn't know from trading currencies. But as soon as I got into it, that's when I started being exposed to it. So I'm holding on to it. But when it comes to Nasdaq now, I love this one here because of the fact that this is the one of the most easiest to follow through with, especially when you're a person that looks at also fundamentals, or maybe if you're a person that looks at the stocks, follow certain companies and stuff. Nasdaq is going to be much more easier. So I feel like this is my top four when it comes to indices being two, currencies being two, and then in terms of commodity, I'd also just add up a gold. Gold being able to just I understand that gold for the past years, decades, it has been like one of the things that you can easily just trade with confidence, especially if your strategy is proven to be working. But with gold, I've seen that there's different types of market conditions. Like for me, normally around the second quarter and the third quarter is where I actually happen to find more profitability trading gold. But the first quarter and the fourth quarter, I wouldn't even want to see myself involved in the gold markets, because I know that my strategy is not effective during those times. So we'll see during this year, but I've put gold a bit more lower because I'm actually focusing on what's working now, in order of me to be able to just get the next breakthrough. So that is one of the things that we are now looking at. So what are the opportunities for the year, or what is that one thing that you can actually start taking a look at for the year in order to be able to capitalize and you being able to just be on the right side? One thing that you need to observe and pay attention to is that lately I've seen a lot of traders that are getting into, I'm obviously trading with the prop firm world, but not even just trading with the prop firm world, being able to just use some of the profits that they actually do get to happen to make from the prop firms, and they withdraw it, take it all the way up to their brokerage account. That is to those traders that are still comfortable with wanting to actually trade with actual capital in the account. But one thing that I've noticed to see is that there is a glitch within the markets, and this glitch is you being able to access your hands on funds. And these funds, once you do happen to trade and make some profits, you're able to keep to yourself, which is getting a split to it. Because I've noticed that with me, yes, it took so many years, having to just stack up, compound interest, I'm depositing every single month, plus as well having to depend on the profits that I'm making to grow my account, having to sacrifice a lot of things, meaning that having to sacrifice time, I'm withdrawing, being able to spend time with family, friends, or whatever that you can do, just because of the fact that I wanted to continuously grow my trading account. But for most people, what you guys are now hearing is actually a breakthrough, because if you are able to get access to, $300,000 worth of funds, or 200,000, or even just 100,000. I actually started trading. My very first funded account was only $25,000. So if you can even start with an amount like that, I've seen there's actually accounts like $6,000 that a lot of people are starting with and going in. But I still feel like $6,000, it's still the same amount that I wouldn't really go too deep to experience a breakthrough. I know most people back then I would actually have went for it in order to be able to experience a breakthrough, but for now it's not going to be very beneficial for me. So that is why you'd see us wanting to go to $100,000 accounts, 200,000. In fact, those are not enough. We want to have what we call max allocation within a specific prop firm. So what that means is just where you are able to just have all types of account mixed up into one, and you have one large big account, so like maybe $600,000, depending on the firm that you are with. So this is something that you need to be able to look at. Once you've got down your currency pairs, once you've got down, you understand how the market moves, the rhythm of the markets, the trends. Once you're able to also spot down, what is those specifics that you are going to be trading, either currency or the indices, and how many, which specific ones you're going to be focusing more on. Then it now comes back down to you being able to take all of that, putting it into a strategy, and most importantly being able to just stand a bit more back and being able to employ your strategy on maybe on a funded account, on a prop firm account, or maybe just on your own account in order to see results, because this is where breakthroughs can actually happen to come. So now there's also what we call macroeconomics when it comes to trading. And understand that from what you can already do as a trader currently is each and every beginning of the month, the very first Friday, one thing you should know is that there's what we call NFP that comes on that day. So what you should do is maybe you can go on your calendar and note ahead that every first Friday that you're seeing on the calendar, make it be that it's NFP, NFP, NFP. And so and then followed up, I want you to actually move over to the next one, which is CPI. Go into Forex Factory or whatever calendar a news calendar that you can get on the internet. Look into what are the high impact news, note down all the important dates. And as well, if you can do something, this is when you can be able to get closer to a breakthrough. If you can now look at some of the news that happened, that are coming this year, you look at what news it is, you look at what currencies or pairs that it does affect, then what you'll do is that you are going to filter out what it doesn't affect for you. Remember, you are trading, let's say, two pairs, two current indices. So if it's not affecting that, you filter that out and then you focus on only the ones that will affect you, that will affect USD. Maybe if you're trading that is a base of USD or a quote of USD and whatever currency that you're looking at. Once you filter, you're focusing on only the ones that has to do with you specifically. Meaning that if someone says, oh, today is the as long as that doesn't affect what you're trading, you do not even want to know anything that has to do with it. Because why? You don't want your mind to be mixed up with too much information. And sometimes, guys, too much information leads you to not even implementing one single thing because you know too much to even just act or to even just get started. So that is what you do. You remove all those, you filter out, then you focus a bit more on the news or fundamentals that has to do with what's going to impact you specifically. You note it down. And then the next move that you are going to be doing now is you're going to be focusing, you're going to be going back on the previous year, and then you're going to look at on the specific dates that the news actually did come, maybe this specific news and this specific news and this specific, when it did affect this currency that I'm looking at. What did it do? What did it react? How did the news come out? How did the currency react? So now you back test, but not like in a way whereby you back testing strategies like how normally would be back testing our strategies when you're trading technicals, but you also backtest the fundamental results, seeing whenever this types of news came, what results came, whenever this done, what actually done. What this does is that it'll help you be able to make much more informed decisions when you are moving forward. And one of the last ones is that risk management. Remember, guys, this video, I'm actually speaking with that one trader that actually wants to see themselves get into maybe making their first, if you haven't yet, making your first six figures in the year 2024. But not only just that, mastering trading in general and being able to use or have trading as a skill. Okay, so now, guys, when it comes to risk management, I understand that in the past few years, what we did say is that you need to just risk a specific percentage of your account. And I have seen that a lot of people are not really following through with this. In fact, a lot of people, what they do is that they risk more than what they actually are willing to lose. And eventually, when the trade actually does go and hit them out, that is when they start to noticing. The best thing that I've learned this year so far is that when you are placing a trade, the very first thing that you need to do is you need to already see what you are willing to lose, not what you're going to make, no, what you are willing to lose. So as soon as you go in the market, when you place that buy or that sell, in your head, what you should say is, I'm willing to lose $30 for this trade or $20, because what that will do is that only will tell you what your lot size should be, where your stop loss should be, and also not even just where your stop loss should be, that will tell you what your lot size should be, but also what it will do is that will tell you how much you can make. Because if you're willing to risk $20 and your trade obviously is like a 2:3, 1:3, that means that on a $20 there's a high chance that you are going to make $60 when your trade goes into profit. So that is how you see it. You look at what it is that you're willing to lose, and then what you're willing to lose is going to tell you what you're willing to win, and that's how you can differentiate you being able to just move forward. So the best thing that I've done personally in order to be able to just cut off time, stressing time, having to think, figure out, calculate, going through all these things, I've got one tool. I wouldn't say it's a tool that I just got on MT5. I didn't even buy it. It's a free tool that I got on MT5 platform itself. And then as soon as I downloaded it, I've installed it on my MT5 platform. And then what that does is that every time I place a trade, automatically, all I do is I just press S, and then I'll put it's either maybe market entry or limits or buy stops. And as soon as I do that, what it does is that I show it where I want to enter and where my stop loss is. I want to put my stop loss. Automatically it will calculate what lot size I should use, because of the it not even I should use, it will automatically place a trade for me in a lot size that will allow me to not lose more than 1% no matter what. So if my stop loss is very tight, I'm gonna have big lots that I'm trading with. If my stop loss is huge, I'm gonna have smaller lots. So that is one of the things that actually makes me like this calculator that I'm using. But obviously, if you guys want more information, want to know about it, maybe want me to do a video on it, where to get it, how to install it, and also how to use it, just let me know in the comment section, and maybe I can do a video on it. But at the same time, guys, this is just a video to be able to speak with that one person that wants to focus a bit more on trading, that wants to focus on trading for the year, but maybe they don't know how to get started. What are the things, what is the pathway or the map that they should follow, or what actually is the steps that they can start off by taking. And I believe that just by watching this video already, you've got the gold nuggets to go to, go out there and do it. But the most important thing would now be applying. So obviously, guys, there you have it. If you happen to have found value from my YouTube video for today, what you can do is you can like this video, and as well just subscribe to my YouTube channel, turn on the notification bell. Whenever I upload videos that are available like this, you are going to be notified. At the same time, comment below, tell me what it is that you liked about this video, and also tell me how it is that, or what it is that you're gonna see moving forward on my channel. It is your buddy Samutupi. I will see you on the next YouTube video.